Assalamu alaikum everyone. This is Azam with Investify.com. Hope you're doing well. So, real quick, we're just going to go over how this whole week went, how our positions are doing, and how our account is doing, and what the expectations for the upcoming weeks are. So, currently, as you can see, we started our account with $1,000, and due to the loss that we took on AMD earlier this week, we are down by about 0.5% of our account value, which is in hindsight not too bad if you look at it because again the goal of this service is to give you a much more long-term approach, a yearly approach of building gains instead of overnight approach. And one thing that you realized if you are still continuing to follow AMD is that we got out near $11.08 and it has dropped down to near $10. So we could have lost a lot more money, but we cut our losses. And going forward, the more positions we take, the less and less we are going to be risking per position. So early on, I said that maybe perhaps you should only risk 1% of your entire account value per position, but there might come a point where we might only be investing 0.5% of our position of our account value per position, which is probably like what a lot of hedge funds do, that they're investing in a lot of different companies, a lot of different businesses, and they're of course dealing with billions of dollars, but they're mitigating their risk by not putting too much money in one place. And that's exactly what VCs also do, that they have hundreds of millions of dollars, but they only put a very small portion of their money in each startup. And that's the approach that we should take with this trading, that this is perhaps our business. And in this business, we are diversifying our account, our value, and not giving too much to any one account or one position. All right, that being said, let's take a look at the S&P 500 real quick. So S&P 500 is at almost, actually it's at a all-time high. And so the thing is that we anticipate that it will continue to move upwards. There is potential for it. It can also go down, obviously, so we will be monitoring how it moves in the coming week and weeks. So it's in an uptrend, and that's that. Let's look at the gold index. And the gold index has been kind of going down as anticipated. The other thing is we can look at is the dollar. And I wonder if I can find dollar here. We have the oil here at least. Okay, so the oil is going down as well this past week. So that's a few things that we are keeping note for. Now let's take a look at our positions that we still have open. Gap, we were able to buy in at $25.94. We are up about 1.5% on it. So that's been our total return. The next position we have is WUBA. We bought in at $38 and it's up about 7.5% in value. So that's great. New Skin Enterprises. We are down by about negative 1.7% on this based on our costs. XPO is up about close to 10%. So we can start to look into maybe taking some of our positions off, moving our stop loss to our entry point. So at least it's break even. And then we can be going on with that. Serapita, I've been a little disappointed with this one, and it's been going down. Our stop loss is around $28.09, but I might just be looking to close this position because one of the things with biotech companies is the faster they move up, the faster they tend to go down as well. So we will be keeping a very keen eye on this one. Carbonite is at 3.38, but the thing about Carbonite was that it did reach its initial target that we had. So if you could if you bought in at around $19.95, then you could probably be closed with this position. I still anticipate it to continue going up. Alchemies is almost near break even. AEM just close by. AMBA is at about 1.39%, and Vonage is up about 0.43%. So as you can see, most of our positions right here are doing pretty well. They're either on the break-even level, some have actually shot up, couple are down, and that's exactly why it's so important how much we are risking per position. Again, for the coming week, we've already vetted the stocks that we might be looking at, and inshallah by tomorrow I might just send the video for that as to what stocks to be trading for the coming week, and you'll realize that it's a much bigger list. It's 10, 15 additional stocks, and at that point you want to start thinking about, okay, how much am I going to risk per position? Because here's the thing, no one can guarantee you which stock is going to go up or down, but based on our system through which we actually pick stocks which are Sharia compliant and the ones that have the highest probability for giving at least a 20% return in the upcoming year, that we make assessments, we make probabilistic assessments how we're going to manage our positions, and that's why it's very important how much we risk per position. So I can probably see down the road in 3 months we actually managing 50 positions, okay? And does that mean that you need to be risking 1% per trade? Hell no. You can just be risking 0.5%. 25% of your entire portfolio is invested in all those positions, but the probability of those stocks eventually leading to over 10, 15, 20% return by the end of the year becomes very high because you've diversified so much. So that's the art of trading, that you don't rush into anything, and if it starts going against you, you just get out and wait for the right opportunity to get back in. The supply and demand, the economics of supply and demand that stands true for any business, it stands true for stocks as well. So hopefully guys, I hope this video helped you all to understand where we are currently in the markets. And if you have any questions, please reach out to us. Thank you so much once again. Have a wonderful weekend. Take care. Assalamu alaikum.